Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Advanced Charting Techniques. And today we're getting back at it, learning a new tool for traders. This is one that some see as a potential more modern upgrade to the RSI indicator. Ooh, that's quite a statement. I don't know. There are pros and cons to this, but we're going to be talking about an indicator known as the Chandi Momentum Oscillator. I think it's going to be new to a lot of you because it's new to just about everyone. But yeah, some traders do see it as very similar to the RSI with potential advantages. Could there be? We're going to be weighing the pros and cons of that, acquainting ourselves with the oscillator, placing an example trade using it. But before we can get to any of that, let me first of all say hello to everybody out there who's checking in on the YouTube chat. Hello there, Chena and Josh, Sharon, Will, Luis Charles, Jay Richardson, David, Life in the Fast Lane, Kevin, everybody else. Thanks for joining us week after week. We always do appreciate your attendance and your contributions to these discussions. If you're here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the fact, we'll enjoy the recording of the session. That's a great way to watch these things. But if you would like to be here in the live discussion, this is a Friday webcast series. We kick things off promptly at 1 Eastern Standard Time. We really would love to have you here in our live audience. And as a treat for my live audience members out there, we have my good friend Rachel Deshelle out there. She's going to be assisting with any chat questions that happen to come in. If I can't get to those questions, Rachel's going to be picking up the slack there for me. Thanks for having my back there, Rachel. I also want to let you know that we can be followed on X. My name on X, or my handle on X, at Cameron May CS. Best place to connect with us on those in between the live streams is on X. So if you have an account on that platform, you should be following your favorite presenters there. But let's get into this discussion. And as we do, of course, we need to first pause to consider the risks associated with trading. Yes, technical approaches to trading certainly carry risks. So bear these important disclosures in mind. The information here is for general informational purposes only. It should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as a sole means of investment research, and investing involves risks, including the loss of principal. Okay, so with that said, let's lay out the agenda for what we're going to be discussing today. First thing that we're going to be doing is taking a quick peek. This webcast is part of an ongoing series of webcasts, so we have some current example trades. At least we have one at this point. Actually, two have closed out since we last met last Friday. So we'll take a look at the current trade. We'll take a look at the trades that have closed out, and then we're going to take a quick peek at the markets to set the backdrop for today's technical discussion using what's known as the Chandi Momentum Oscillator, also known as the CMO. Now, I'll tell you. All right, so I'm going to sort of skip ahead a little bit here, but before we're done, we're going to be planning and placing a trade using that momentum oscillator. We're also going to acquaint ourselves with how it's built. But something funny happened when I was preparing for this webcast, as I always do. I like to see what the rest of the technical analysis world is saying about an indicator that I'm about to talk about, because no one knows everything. I like to see, okay, what others have to contribute to my knowledge of an indicator. And one thing that I noticed over and over again is that people kept mispronouncing the name of the oscillator. It's the Chandi Momentum Oscillator, spelled Chande. It's a gentleman from India named Tushar Chandi, but apparently some people think he's French and they pronounce it Chande. Now, that to me was funny, because I think there may be channeling their inner 80s kid and are thinking back to Chardé. Maybe they think this gentleman is just a smooth operator. But anyway, let's get right to it. Let's go have a look at our existing positions. So if you'll forgive the little 80s pun, most of you aren't even going to get it if you weren't listening to Chardé back in 1984. Anyway, we had a position on Oracle, ORCL. What in the world happened with that? If you'll notice, the quantity right now says 0. That's because we just had the stop filled on Oracle, on our Oracle trade. So if we go to the charts, let's have a look at our Oracle position. So this is last week's trade. And what we noted at that time, for those that use a balance of market power oscillator in the planning of trades, a common trend indicator that's used in combination with that oscillator is an exponential 50 and 100 period combination of moving averages for trend confirmation. If the 50 is still above 100 for some traders, that means the trend is still intact. And then the signal may be generated if the BOP or the BOMP happens to slip down below minus 0.2 and then turn. Just make the slightest upturn, doesn't even necessarily cross back up above the minus 0.2 range. This can indicate an oversold condition, meaning maybe prices have come down to a comparatively extreme low within a current uptrend, and maybe they'll start to go up again. So initially, that premise was proving fairly accurate. We bought this at about $302, and within a day, we got up to almost $330. That's very nearly a 10% swing to the upside. That Oracle trade was looking pretty good, but this is what can happen with trading. It turned, retreated, came down and hit our stop, which was set just below previous lows, and we were stopped out. So we had a stop down here at 292, I believe. So we wound up taking a bit of a haircut on this one. That happens. Welcome to the world of trading. We swung from about a 10% gain to about I think we wound up with maybe about a 6% loss on this trade. Okay, so that trade has been concluded. If you weren't here to see that webcast last week and you don't know what the balance of market power oscillator is, I would definitely suggest you go check that out. So here's a good suggestion for you. If you're new in these series, welcome. Great to have you here, but also make sure that you subscribe to our Trader Talks channel. You can click on the little subscribe button down in the lower right-hand corner or go below the video stream window. Click on subscribe. It only takes a second. It doesn't cost anything to do it. But our Trader Talks Schwab Coaching webcast channel on YouTube is where we house playlists of previous webcasts organized by series. Of course, you can also join the live streams here. But for example, if we wanted to go find last week's webcast, we could just click on playlists on that YouTube channel, scroll down about halfway. There it is, Advanced Charting Techniques. I can click on View Full Playlist, and you'll see right there, Trading the Battle of Bulls versus Bears with the Balance of Market Power indicator. All right, so this chart indicator is a bop, which apparently some people think that Chandi is. Anyway, let's go back to our next trade. Next position was SMCI. That is, we have 100 shares on SMCI. What led to the acquisition of that? What was the plan with SMCI? What is the plan? Well, this, if we go up to our studies, let's load up our study set for the SMCI market forecast trade. So this trade was taken on the technical evidence of a market cluster. These don't happen very often, where all three of our oscillators dip down below 20 at the same time. You can see previously on SMCI, that has signaled pretty significant shifts in price. Now, it doesn't always work out this way. This is still a TBD scenario, but we took an entry right here on this cluster, and the stock is, it's gone sideways a bit. Interestingly, it came right down to the lows that we had noted at the time of that discussion. It looked like our support was right about here, around 40, and it came right down to about exactly 40, and then started to rally. Now we're up over 10% off those 40 lows, and the trade is a little bit positive. We're going to let that one continue to work. We do have a target, yes, all the way up there at 62. Time will tell if we can get there, but let's move on to our third trade. But there are only two symbols here. That's because one of our trades was stopped out between last week's discussion and this one. That was our T-Mobile trade. So let's look at T-Mobile. Try that again, TMUS. And this trade was taken using our trend value momentum study set. So let's load up that TVM strategy set. And with this position, we took the trade. When was that trade taken? Let's go to our account statement. Let's look back for TMUS. That trade was taken on the 12th. Okay. So that was right Yep, right there. Let me put an oval around that to highlight that date. Well, there's our 12. This was our entry. And what we'll notice here is that our stock, our in this case, we look at a 50 versus a 100 period triangular moving average. The 50 was above the 100. Interestingly, the price was also just trading above the 100, which is actually not a requirement of this entry system. The RSI, which is our value indicator, so we have trend, we have value, that had reached down into an oversold condition and just started to tip back up above. So there was an entry there. And finally, our momentum oscillator, the MACD, had shifted from a bright red to a dark red, signaling a potential shift in the tug of war between buyers and sellers. The momentum, which had been conceptually strongly in the hands of the sellers, maybe a little bit of shift toward buying. In any case, there was our entry. Took that entry, planned to exit at the previous high at 260, a stop just below recent lows down here at 235. We've come right down. Let's zoom in on this so we can see. I think we got, yeah, look at this. What was the low right here? It was actually this day. Low of 234.76, 24 cents was the deciding margin between still being in the position and being tripped out. This could turn out to be what we call a whipsaw. Has anybody else experienced that before? Your stop happens to be just in the wrong place, just through happenstance or otherwise, tipped out, and then the stock takes off. So this is interesting. It's not fun to have that happen, but is it possible that the trader, having gotten kicked out of one trade, they may revisit the position and say, well, wait a second, trend is still intact. The 50 is still above the 100. The RSI, our value oscillator, has still again just risen above that 40 line. And our MACD histogram continues to strengthen. So momentum seems to be shifting more and more to the bulls, despite the presence of recent red candles. Is it possible to re-enter a position that we were just kicked out of? Yep, that's a possibility. Oh, and S says, can you briefly discuss how you found this stock in the first place? So you can go back and watch the recording. I'm not going to revisit that too much, but I will be showing how a scan can be conducted for today's trade. And you can use that same knowledge to maybe set up a scan for something similar to this. But very commonly, I just bring up a list of the S&P 500 and go down through it just with the indicators on the chart and look for the signals manually. Yep. That's pretty common for me when there are multiple signals like this, but a scan could be built without too much trouble for this. So this is an important point that I want to make here. Could the trader re-enter at this point? Is there a valid signal? That's the big question, because a trader very likely should be trading according to a predefined set of rules rather than just making it up as they go along, because there's a temptation sometimes. Our human emotions can get in the way. And when we get kicked out of a trade and we think we're getting left on the curb, we might have FOMO, fear of missing out. It might also just be plain old revenge trading. We want to get our money back from that stock. Has anybody ever felt that impulse? Well, there's a difference between revenge trading and trading according to a set of rules, but on the same stock. It may feel the same. Well, one is just buying the same stock back, and the other one's buying the same stock back. Yes, one's doing it according to emotions. Another one is just actually confirming that the signal is still legitimate and still current. And that's actually what we have here. So I'm not going to do a revenge trade. I am going to do a measured, disciplined re-entry. Jay Richardson says revenge trading is very dangerous. Yeah. This is a fresh new signal, legitimate as of today, according to the rules of this system. So let's go repurchase those shares. Now, could we implement the same approach? Yeah, I think we could. 260 target, 235 stop. If the trader feels like that stop, it needs to be a little bit lower because there's been a new low achieved. That could certainly make sense. So how about we zoom in here? And with the re-entry, Our new low is actually down here. So let's give it maybe a percentage point or two of wiggle room below this new low of 234.76. Maybe put our new stop at 230. Okay, so exit at 260, stop at 230, entry around 238, eight-ish dollars of risk, 22-ish dollars of reward potential on this trade. Let's go place the trade. And remember, last time we did 25 shares. We'll be consistent. Let's do an additional 25 or a new 25 shares. So let's right-click on our ask price, buy a custom stock position with an OCO bracket. That puts in an order to buy 25 shares. And we can put in orders to sell 25 shares under disciplined conditions. I'm going to put this in as market order. So that's literally saying we're willing to pay whatever the market price is. There are certainly risks associated with that. We're going to put our target, that's our limit order, up there at 260. And then our stop, we're edging it down to below the recent lows to 230. Good till canceled. Till canceled. Good till canceled. There we go. So let's click confirm and send. I'm going to be buying the 25 shares of T-Mobile at the market price. With market orders, prices can change quickly in fast market conditions, resulting in execution prices that can be different from the quotes displayed at order entry. Not guaranteed to pay $238.56 just because that's what it says at this moment. With stop orders, there's no guarantee the execution price, in other words, the price that we actually receive if our stop is triggered, will be equal to or near the activation price, and that 230 is our activation price. So what this is saying is might wind up selling for less than 230, even though we put our stop at 230. Now, there's not a commission on this trade, but there can be on some types of trades. But let's send this off. There we go. And we should see a quick fill on this since we've submitted a market order to buy. But with that accomplished, let's go have a look at this. Bought at 238.56. Okay. So now let's go have a look at what's going on with the markets and start to plan and place a new trade. Now, each week we use this same trend value momentum study set as a general gauge of what the markets are up to. Right? It's not to say this is the way that every trader should do it. I just like to introduce at least some element of continuity from one webcast to the next, rather than just hitting you with something new every single time. So this is sort of our anchor point. All right. But the S&P 500, we're looking at this through that 50 triangular moving average, 100 triangular moving average. You can see the 50 has been advancing above the 100. In other words, our intermediate trend line has been strengthening ahead of the longer term trend line. And for some traders, that can be a confirmation of trend strength and continuity. And right now it looks like we have a continuation of a bullish trend. Yep, we had a few days of selling. Looks like we may even have a close above the high of the low day bounce on the S&P 500. We also see the RSI had been weakening, but while still above 50, it appears to be turning. Also, some additional strength from that value metric. As for momentum's still kind of struggling. You can see it just slipped below zero. It's gone to -2. So slightly negative momentum. That's a reflection with the way the MACD is built of these 3 days carrying just enough weight to pull us down, keep the momentum in the hands of the sellers despite today's buying. So this is sort of a 2 ticks for the bulls, 1 for the bears. Overall, though, we may just add this up and say, well, even if the trader sees a little bit of weakness here from momentum, what that might lead them to do in adjusting their approach to the markets is maybe pause on a new bullish entry until things look a little bit stronger. Or if they do take new bullish entries, tweak the strategy or the quantity to be a little bit less bullish. Fewer shares, a different, a less aggressive strategy, something like that. Yeah, Gazelle says, what is a moving average triangular? Another good question there, Gazelle. And I think, yeah, thank you. Rachel has addressed that, but it's a double smooth moving average is what Rachel correctly called it. Basically, instead of using closing values, like on a simple moving average, we just use the closing value over a given period, like 50 days, and we get an average of that and then track that over time. We actually get an average over the same period, but using the simple moving average values. So instead of using price, we use a simple moving average. So it's a sort of a moving average of a moving average, or in other words, a double smooth moving average. So if you ever want to see a discussion of those sorts of things, if you have a more targeted question, let me see if I was good enough in the titling of my webcast. I think I did one about triangular moving averages, but I can't remember if I used the word triangular in the thumbnail or the title. So you might have to go look through my webcast series for a thumbnail that says triangular. Let's do a search though. No, I didn't think so. Okay, I was worried that it was in the thumbnail. That appears to be the case. So instead, I'm going to do moving is, and let's see if we can quickly spot that thumbnail. There's Hull. There it goes. There we go. Did you see that with that thumbnail? Simple, exponential, and triangular. So in that one, I take some more time to explain that one. All right, but let's say that our trader here is still bullish. So what we're going to be doing is planning and placing an example bullish trade, and we're going to keep it fairly straightforward. We're going to use a grand whopping total of one indicator to plan this new trade, and it's going to be the Chandi Momentum Oscillator. Now, how many of you have actually heard of the Chandi Momentum Oscillator? I'm going to be surprised if anybody says yes. I'm just going to be honest about that. I don't think that the understanding of this indicator is really widespread. It's a relatively recently introduced indicator. Doesn't get as much press. Let's call it press. As much, you can't do a search and find as many discussions about this, but it really does very closely mirror the performance of the RSI, but with some fairly significant differences. Okay, so Sharon says no, Gazelle, Greg say no, and Janelle and Taylor and Lalit and on. Never heard of it? Okay, well, let's add it to our chart. I'm going to use as an example today. Let's pop over here to Tesla. Tesla's the stock we use for yesterday's trade. By the way, interestingly, yesterday's trade hit its target overnight, so that was nice. Anyway, but let's clear off our drawing set. Let's start with a clean chart, and I'm going to add up here the Chandi. So it's spelled Chande. You can see why someone who they're not familiar with the gentleman named Tushar Chandi, they might see this and say, ooh, Chande sounds exotic. Anyway, I'm going to apply that to our chart. You'll notice the number 20 there. For you technicians in the audience who pay close attention to their technical indicators, what do you think that 20 means as we learn how this is built before we learn how it's used? Yeah, 20 means that we're going to be using a daily chart. It's going to use 20 days of data to calculate the indicator. I'm going to click apply and click OK. And there's our indicator. And just like the RSI, you'll see that it oscillates up and down between highs and lows on a horizontal plane. It reaches overbought and oversold conditions. But this one, instead of the RSI 0 to 100, this is going to be ranging around 0. Conceptually, it could go as high as 100. Don't know that it ever does. It can go to as low as minus 100. I don't know that it ever does. I really, really, really have to dig hard to see if anything's ever gone that far. But there's a fairly straightforward calculation for calculating the Chandi Momentum Oscillator. Here it is. Take the number 100 and multiply it by this. And this is going to sound like a lot, but we take the sum of gains, in fact, the sum of losses. This is going to sound like a lot. I'll give you a current example to really demonstrate how this works. And then we take the sum of gains and add it to the sum of losses. That's actually the whole indicator right there. Sum of gains minus sum of losses divided by the sum of gains plus the sum of losses times 100. So here's what that means. What we're doing is looking at, did the stock go up or down over the last 20 days? Every time the stock goes up, it's assigned a positive value equal to the amount that it went up. Every time the stock goes down, it's assigned a value. It's actually not positive. I shouldn't have even said positive. More accurately, it has a value. Okay, we just keep track of how far it went up and each time it went up. And then we look at how far the stock goes down on the down days each time they go down. And then we just sum all those up, sum up all the positive increases, sum up all of the drops, and we use those in this equation. So if I tried to think, well, how do I explain this very simply? Here's the way that I think about it. Let's start with day one and the current and an initial price of the stock and how much it changed. Okay. So on day one, let's say that our stock price is $100, and so therefore it hasn't had an opportunity to change. And now let's just use 5 days of sort of fake data. Okay. So day two, let's say we go to 102. What's our change? Up $2. Okay. Let me get my cursor out of the way so you can see what I'm doing here. Day three, let's say the stock retreats a bit. So its value, its gain, or in this case, it would be a loss of $1. Day four, let's say we get a pretty good day, $3. Day five, we retreat, or let's say we just continue to advance, doesn't really matter. And then finally, day six. So this is our 5th day after the starting point. Let's say we retreat a little bit and we have a negative day. Well, now we can sum these. Let's sum up the gains. Well, we had 2, 3, and 2. That's a 7. Sum of the gains is 7. Sum of losses is just 2. I know you were tempted to say minus 2. It's just 2, okay? I put the minus in here just so we could see that it was a loss. But we don't use minus in this equation. So now that we have that information, we can actually plug it directly into this equation. Paste that in here. What's the sum of the gains? 7. Minus the sum of the losses, 2. And then 7 plus 2. All right, so what is this? 7 minus 2 is 5. 7 plus 2, oh, I left the word sum in there. Let's get rid of that. There we go. So 7 plus 2 is 9. 5 divided by 9. 5 divided by 9 is ultimately going to be our Chandi momentum oscillator value. And that would just be plotted as a dot on our chart. And that would actually take the chart up here, up to the overbought range. A 55 is actually a very positive number. Now, if we were to reverse all of these, if we were to just say, you know, maybe the stock went down $2, up $1, down $3, down $2, up $1. So that would just change this to a sum of gains of 2, a sum of losses of 7. And let's see, if we had a 2 minus a 7, that would be a minus 5, right? 2 gains minus 7 losses would be 5. The denominator is not going to change. It's still going to be 7 plus 2, so it'd still be 9. Negative 5 divided by 9 would give us a minus 55. So it inverts the equation, and we wind up with values that are down below 0. And in that case, that would be interpreted to be quite extreme as far as the Chandi oscillator is concerned. And that would be a negative value. That's it. That's the whole thing. It just changes from day to day depending on what prices are doing. Those inputs are going to be changing, not terribly quickly, because each new day is only one data point change in 20. This looks back over the last 20 days. My little example here just used 5 days of ongoing data. So this would extend out another 15 days, and it generates this line, right? So Coco says, can you set the rolling period? Yes, you can, Coco. If we were to pop back up here to the edit studies icon, that's why it's called edit studies, because we can edit those studies. Let's click on the little gear. We could change this to, if somebody wanted to get maybe a longer term view, a larger data set, maybe they crank this out to 30. Or if we're doing shorter term trading, we want to speed the oscillator up, maybe we change that to 10. So what that allows, if we're using a smaller data set, each new change in data a single day can have a 10% impact on the construction of the oscillator conceptually, versus just 5% if we leave it at a default 20, which is what I'm going to do here. But yes, we can do that. Okay, I'm going to leave it there at 20. That's what Tashar intended when he constructed this oscillator. So how is this oscillator traded? That seems to be an important part of this discussion. Well, just like the RSI, it has overbought and oversold ranges. In this case, instead of the RSI's ranges 70 and 30, we might be looking at a traditional view. Is if we get above 50, that's considered to be possibly representative prices strengthening. The bullish days being so strong in their ratio to the bearish days that it's reached potentially a short-term extreme. The concept here being is that stocks tend to move in waves. And what we're looking for is the crests within those waves and the troughs within those waves. And the crest is typically built because the buyers have really gotten a disproportionate control of price over a short period of time. So when we get above 50 here, according to the Chandi oscillator, this is considered to be overbought, and it's sort of buyer beware conceptually. On the other hand, if we reach extreme lows as defined as being below minus 50, you can see that doesn't happen very often on this chart. For Tesla, we've only gotten below 50 once, had a really near miss right back here. We got below 50 once, actually twice if we count this sort of double dip there. So the signal becomes as we dip below 50 and then rise back up through that minus 50. I should throw in the minus every time, but I think you get what I'm saying there. That can be the entry signal. So the trader here is just looking for prices to reach extremes. If we're bullish, we're looking for actually a bearish extreme, hoping for a rebound toward a more normalized condition. It's not a guarantee it's going to happen, but in this case, it did a pretty good job. Now, when does a trader know when to take profits? Well, we've discussed in the past with these extreme oscillators, we can look to previous highs. And in this case, boy, this really came down. There was maybe a little intermediate high right there where the trader might choose that as a target. Maybe this one back here. Or one of the conceptual advantages over the Chandi oscillator versus the RSI is that it has this midpoint, the zero line. And that transitional line is sometimes used as an exit point for a trader who's taken positions on extremes. So if we can get back up to the zero line, that may be a signal to take profits. So an entry here might have been, as we're popping back up above minus 50, this looks like an entry right there with a possible exit right, looks like here. Now a second exit, if a trader is really patient and looking to be more aggressive, is to wait to see a rise from one extreme to the other. And in this case, just crossing above the 50 may be the signal to the trader to exit right there. Right? In this case, it was both of those signals worked out. Doesn't always work that way. I always have to say that. But that's a typical trading approach to this. Where might losses be taken? Well, a trader might wait for a cross back down through the oscillator itself, or if we just want to automate it, we might look at recent lows. So in this case, the low actually coincided with the day of the signal. So right in this most recent example, that was the entry day, and there was no recent day lower than that day. So the trader might just put their stop $1 or $2, a percentage point or two below that low. Okay. Ahmed says we'll be looking at Google and Amazon, please. We're not going to be looking at a lot of stocks because I can see the clock is ticking already. What I want to do instead is how can we find stocks with more recent signals, because Tesla has kind of reached the upper extremity here. Maybe for a bear, they might see this as an entry signal, but for a bull, it's just a recent exit. It's a hold off. Now, before I go do a scan for more recent signals, I will say there are other potential uses for this oscillator. Yes, some of you might be thinking, so do we use it? Is it kind of like the RSI? Can we look for things like a divergence? Yes, divergences are commonly used on this indicator. So let's switch this over here. Oh, and actually, before we do, let's do this. I did want to compare. Why do some people see similarities between this and the RSI? Let's put an RSI on there, and I think you'll see the similarities right away. Add that to our chart. So here's our Wilder's oscillator. So Chandi just introduced this oscillator in 2022. It's 3 years old. When was the RSI introduced? It was actually introduced in 1978, 47 years ago. Okay, so some people would call this sort of old school versus new tool. Click apply, click OK. I don't know, do those look similar to you? Yep, we have overbought, oversold, overbought, oversold. We have buy signals being generated on crossovers. We have sell signals also potential being generated from crossovers. But one thing that some traders like is that mid line for the Chandi, which is not available on RSI. Also, the signals are not identical. They're similar, but not identical. The RSI tends to have faster signals for better or for worse. The Chandi tends to have somewhat slightly slower signals for better or for worse. So if you want to do a more in-depth comparison, you can bring this up on a series of stocks and see if these refinements of a day or two or three on those entry and exit signals, is it adding up to a contribution to performance, or does it seem to be detracting from it? All right, but let's take our RSI off of there. I want to go look for something with a more recent, fresh, oversold signal. So here's how we might do that. It's going to be a study filter signal or study filter scan that we're going to be doing. So we need to go over to the live platform. So I have that up right here. Let's go to the scan tab. And we're not going to be using any of these stock filters. I'm just going to take those off. And instead, let's scan in the S&P 500 for stocks. Let's add a study filter and edit that filter. But we're going to be looking for a Chandi momentum oscillator dipping down below 50, but rising back up and through 50 within the last 3 days. Right? So let's remove the ADX crossover as the default. Let's add a new filter, and it's going to be a study filter. Let's look for Chandi or Shande, if you want to sound sophisticated, I guess. Let's look for the 20 period Shande. Oh no, I did it. Chandi. I knew I was going to do that. I couldn't get it out of my head. But crossing above a value of minus 50 within the last 3 bars or days. In this filter, as we have it currently constructed, is going to be a daily filter. All right, let's click OK. And that's our whole scan. Let's click scan and see how many stocks in the S&P 500. All right, looks like we have maybe 20-ish. Let's just go with the first one. How about Boeing? Interesting. Okay, so Boeing, yeah, you can see just dipped below minus 50, crossed back up above. Our stock is bouncing. Now, the trader could just set a target up here at 238.61. I am going to say, let's go for that zero line instead, just to maybe explore that. So let me make a little note here. Exit on zero crossover. We'll just follow up on that in future webcasts. But we are going to put in a hard stop on this. And it looks like our recent lows are 211. A couple of percentage points below that is going to be down at about 207. So I'm going to put a stop right down around here. Okay, there we go. So let's plan. Now, what some traders might do if they think their target's relatively close is they could use a more snug stop. Should we do that at 209? How about if we move that up to 209? That's just 1% below those recent lows. There we go. But let's place our trade. Go to the trade tab, right-click on the ask price. We're going to put in a custom order with a stop. And we typically spend about $5,000 on each trade. That's going to give us maybe, 5 shares would be about $1,000. Maybe we'll do 25 shares again here. A little bit more than $5,000. That's okay. There we go. I'm going to enter market order with our stop, good till canceled at 209. There you go. Let's click confirm and send. Buying 25 shares of Boeing at the market. We're going to have a stop at 209 with a target in mind of just getting back up to that zero line. We're going to put that one to the test. With market orders, prices can change quickly in fast market conditions, resulting in execution prices that can be different from the quotes displayed at order entry. We don't know what we're going to pay just yet. And with stop orders, there's no guarantee the execution price will be equal to or near the activation price of 209 in this case. Let's send that order. There we go. And we've accomplished what I set out to do today. Somebody says, can you share this scan? Yes, I can. Just be aware that scans are not guaranteed as to timing or accuracy. Okay? All right. But we've accomplished what I set out to do today, everybody. I wanted to introduce the Chandi Momentum Oscillator and, compare it. It's sort of a new school version of a old school. Kind of sounds like a dismissive. There are pros and cons to each technical indicator, potential pros or cons, but some see it as a new version of the RSI. Interesting. We planned and placed a trade with that new indicator. We even talked about exactly how it's built. So I hope you found this to be educational. This is what we do on Fridays. If you're enjoying the education, make sure you do yourself a favor and subscribe to our Trader Talks channel on YouTube, because this is where you can find all of our playlists for our webcast series. The vast majority are added after the live stream is over to the playlist right here. You can join our live streams right there. You can see, as I've done already, you can do a quick keyword search for topics of particular interest. Another thing that I want to suggest that you do is to follow us on X. You can find me on X at Cameron May CS. Now, Rachel, you've just joined the team. I haven't even entirely confirmed for myself yet, but let me check. Can you follow Rachel yet? Rachel Deschelle CS, I would guess, is what her handle is. If you want to chat that in, Rachel, yes or no, positive or negative. That's my fault for not checking on that. But in any case, it is the best place to connect with your favorite presenters in between these live streams. So there's my handle on X. And I like to post things like, hey, the inflation numbers just came out right on target today. Markets seem to like that. I wonder what my followers think. Do you think that inflation is going to strengthen or weaken? Are we going to be seeing higher or lower inflation numbers the next go round? So if you reply to one of my posts, I reply right back to you. Great place to connect with your favorite presenters there. But everybody, thanks for giving me your time today. I'll see you all again in just an hour, because I'm going to be covering for the Market Movers webcast. So I'm going to let you go. I'm going to go prepare for that. I will see you again very soon. Rachel, thanks for helping out in the chats. Thanks everybody for clicking the thumbs up or the like button. That's always a help to your presenter. It's a pat on the back to them, but it also gives their webcast a boost in the YouTube algorithm, helps more people find these discussions, learn things like the Chandi Momentum Oscillator. So, all right, guys, I will see you very shortly. I'll also see you in my other webcast series that are regularly scheduled. I'll look for you on X, but whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye.